All right, back to it now. I'm looking at the market's up a little bit again yesterday. It's almost back to 43,000 on the Dow. I mean, it's one bit of good news and then more good news. We're all the way back. It looks like we are close. The economy seems to be humming along quite nicely. If we get a drop in interest rates, it could really take off. Nick Hopwood is a certified financial planner, regular contributor to this program, and the founder at Peak Wealth Management. Nick, thank you for being here as always.
Steve, thank you for inviting me.
Last week, if I'm not mistaken, I think the market went up every day. Was I wrong? I think the same thing happened a couple of weeks ago. This is pretty good winning streak. What can you tell me about it? Am I right or wrong?
Yeah, you're right. Last week, the market was up all 5 days, which is very rare. But adding even more interesting to the fact that 2 weeks before, it was up 5 days in a row as well. So 2 out of 3 weeks, up 5 days in a row. It's never happened before.
Really?
So it's unprecedented. But if we have 1 week, right, it's very bullish looking out a year. I'm not saying that, the next month is going to be fantastic, but looking out the next year is very bullish.
Well, what I would say is, look, there are a lot of people that had a lot of fear mid-April. And, they're the people on the big media companies, it's going to be the worst April since 1932. And, all this fear-mongering and so forth. None of that has turned out to be true. April actually bounced up at the end. May has been solid so far. We're not all the way back. But we're close. And a lot of people are back to even, and some are actually doing better depending on how their portfolio was set up. So we're in pretty good shape all of a sudden. What do you think about tax cuts going forward? That's a big part of this. The Trump tax cuts, the one big beautiful bill, that's all part of what people hope will continue to fuel the economy. What are you seeing? What are you thinking?
Well, I love the tax cuts, okay? I don't want to see us go back to 2016 levels, but I'm not excited about this particular bill. It's very disappointing on the spending side because we don't have a revenue problem, right? When Trump cut taxes in 2017, revenue went up and the Treasury is flush, okay, with income coming in. The problem is the expenses, and I'd like to just embrace what Ron Johnson and Rand Paul have been saying and get us back to those 2019 levels of spending. If we can do that, I think everything would be great. But this bill is just not doing it for me on spending. What do you think about that, Steve?
Well, as I look at this bill, I spoke to Senator Ron Johnson of Wisconsin on Friday here on this program. He said he's a no. If this bill stays the way it is, he is a no on this because he says, I cannot support $2 trillion in additional debt each year for the next 10 years, which would push us to nearly $50 trillion in debt. Excuse me, nearly $60 trillion. We'd be in the high 50s. So that concerns me. If people look, there's no bigger supporter of Donald Trump and his agenda than Ron Johnson of Wisconsin is a conservative Republican. If he's not on board, it's a red flag for me. What do you say?
That's exactly my concern. I'm with Ron all the way. And so let's just assume that it does get passed as it is or something similar. We're looking at, maybe President Trump signing it in July. And the Treasury is going to be completely out of money by then, right? So now we're going to have Secretary Bessent come into the bond market issuing perhaps $1.7–2 trillion worth of Treasury bills, notes, and bonds. And there's really only one other time that we've been up at that 1.7 trillion level in a short amount of time. And interest rates did go up. They spiked a bit on that because maybe the market can't handle that much all at once. So that's a big concern for fixed income investors. And we want to avoid, having to issue that many bonds in such a small amount of time.
Well, if I'm not mistaken, Nick, I just saw yesterday long-term yield on bonds has surpassed 5% right now.
Right.
Which,
so
which means people are concerned, right?
Yeah. Let's tie that in with a credit downgrade, right? So the long-term stability. Yep. The Moody downgrade. Let's go back to 2011 when S&P downgraded us. I'll never forget on Sunday night when futures opened after that announcement, the S&P ended up down like 6-point-something%. Fast forward to yesterday, right, the first day after the Moody's downgrade, market was actually up. So this time is different, but yes, it did push yields higher, especially in the long term. So the 30 years up above 5% now, the 10 years hovering around 4.4, and that's that's okay, right? But we do want to see those Fed cuts, which will help our fixed income investors. It'll help the Treasury pay the interest, and the stock market loves cuts. Hey, wouldn't you like to refinance that mortgage out of a 7% mortgage and be able to buy a car at less than 7%? So there's a lot of benefits with cutting the rates, but the Fed maybe one or two times later this year is the path we're on.
Yeah, and here's the thing. Jerome Powell claims to be nonpartisan. I'm sorry, Nick, I don't buy it based on his behavior. Jerome Powell is a political animal. Am I right or wrong about that?
Well, it's interesting because he was appointed by Trump originally, but you wouldn't expect it based on what's been happening.
Yeah, you wouldn't think so. Another note that came to mind for me here, and I saw this. There's an argument between Trump and Walmart about raising prices, but I saw a guy post on X. I don't remember the company, pretty big company that supplied, I think it was an auto parts to Walmart, and said, "Wait a second, Walmart. Why are you going in and raising price on our product? We're 100% American made." He called him right out, said, "I will never shop at Walmart and I will never send my products to Walmart anymore because they're lying to the American people. 100% American made. Walmart's jacking up the price on these 100% American made products." And he called him out on it on X. I thought it was pretty interesting. But this feud is kind of it kind of brings everything into full relief, doesn't it?
Yeah, it's really unprecedented to have the president arguing with prices for a retailer. But, Walmart is basically blaming Trump, and Trump is shooting back. I don't know the interworkings of Walmart and all the details and which products are facing tariffs and not. But, I understand if Walmart has to pass along some of the costs. But like you say, there's going to be examples where maybe that's not exactly true because it's American made. So I get that. But I just don't think it's a good look for anyone to have Trump and Walmart arguing publicly about and blaming each other. I don't like it.
All right. I got about 30 seconds here. You got one last thing that was on your list here, and it's got me intrigued. How do I make $126,700 tax-free in retirement? It's right there. I'm like, is this a misprint? Apparently
it's real.
It's not.
Real. Okay, Steve, imagine you're retired, so there's no working income. Imagine
I
you're
can imagine being retired. I like that. Go ahead.
Imagine you're delaying Social Security to get the max.
All
Imagine
right.
you don't have a pension, right? So there's no income unless you start drawing from the portfolio.
All
Well,
right.
if you have a big brokerage account, right? Your brokerage account has capital gains. I'm not talking about your IRA or your 401k. Your brokerage account. You can show zero income, but show 126,000 of long-term capital gains, and they would all be at 0%. So there's your tax-free retirement. But most people don't have big brokerage accounts. They just have 401s. My call to action is to fund your brokerage account.
All right. And if you want a second opinion, look, we got a QR code we can put up there. You can talk to Nick anytime you want. About what he thinks about the future, he seems reasonably optimistic, but there's a couple of caveats to that, as you can tell. There always are, because he doesn't have control over Jerome Powell's thinking. Neither do I. But that QR code, you can get a second opinion. You can also go to peakwm.com if you ever want to talk to Nick and say, hey, what do you think about what I'm doing here? Do I need a brokerage account? How should I invest? High risk, low risk, medium risk? There it is. Nick Hopwood, always appreciate you being here. Thank you.
And don't forget the /Gruber, peakwm.com/Gruber. Thank you.
Well done.